It's important to mention that our approach has always been to under-promise and over-deliver, and we are confident that we are going to achieve that again this year.
Hello, you're watching Proactive. I'm joined by Hercules Site Services CEO Bruce Korkmaz and also Chief Financial Officer Paul Wheatcroft. Bruce, Paul, very good to speak with you. You've announced your full year results today. Bruce, why don't you start off by taking us through the top highlights?
Thank you, Stephen. We had a fantastic 2024, and yet again, we exceeded the market expectations. We are very excited to announce that we hit over £100 million in revenue, which is a record year for us. We have achieved strong results through growth in our labor supply and our civil projects divisions. We are also pleased that the cross-selling between the divisions and subsidiaries remained a key factor in 2024. We made a strategic decision to divest our suction excavator business to increase our cash flow, profit before tax, and earnings per share so we can deliver better results for our shareholders. As you might remember, that we have completed our first acquisition just over a year ago, a company called Future Build Recruitment, adding a white-collar labor supply to our successful blue-collar labor supply business, and this added around £1.5 million in revenue to our overall turnover. About a year ago, we secured a 5-year contract with Balfour Beatty Rail for our rail labor supply division, and since then we have made more clients to our portfolio. We established our Hercules Construction Academy in January last year, and since then we have started generating our first revenues while upskilling and cross-skilling our workforce. Last year, we paid a dividend of 1.72 pence per share to our shareholders, and we are pleased to confirm that we'll be paying a dividend this year also. And lastly, in September, we raised around £8 million to invest in acquiring companies within the labor supply sector, enabling us to grow even further.
Thanks, Bruce. So obviously some great achievements throughout the year. Paul, would you like to elaborate on the financial highlights for full year 24?
Absolutely, Stephen. Thank you. Well, as Bruce said, it was another record year and yet another year of exceeding market expectations. In fact, if you measure it over 3 years, our revenue compound average growth rate is 48%, which is pretty impressive by anybody's standards. Looking at the revenue numbers, revenue from continuing operations increased 28% over 2023 to just under £102 million. But including discontinued operations, that was actually about just shy of £107 million. Very, very good result. Big change in the year. Similar success story on adjusted EBITDA. The continuing operations for the year delivered 4.7 million, and that's an increase of 34% on the previous year. And again, if you include discontinued operations, the measure was 5.1 million, which actually was £1 million more than the same figure in 2023. So a significant change there. And that funneled its way down into adjusted pre-tax profit. So on continuing operations, that increased 43% to £2.6 million over the year. Very impressive change. We're all very, very pleased with that, as you can imagine. Revenue growth was also accompanied by strong cash conversion, aided by effective credit management. The net cash that we generated from continuing operations during the year was £7.5 million. That was up from £3.3 million in 2023. So that connected with the fundraise that Bruce has just referred to, and the use of in fact, relatively minimal use of the invoice discounting facility we have has allowed us to be very, very healthy with cash, in the best position cash-wise that we've been for a good few years.
Bruce, what do you think people can expect you to deliver between now and the end of the next financial year?
Thank you, Stephen. We are really excited about this financial year also. The divestment of the suction excavator business will reduce our debt levels, increase our cash flow, and deliver higher profit before tax and earnings per share. This move will also allow us to dedicate more resources to capitalize on the significant growth opportunities in our labor supply division. The infrastructure and construction sectors are still thriving, which is great for our organic growth. Following the July 2024 election and the recent budget, investment in these sectors is expected to increase even further, putting us in a strong position in the market. It's also important to mention that most of the national insurance cost increases announced in the recent budget will be passed on to our clients. And we started this year really strong, as I mentioned before, with a successful fundraising, bringing 3 well-respected investors on board. This gives us a solid financial position to grow both organically and by acquiring other companies, other labor supply companies in the infrastructure sector. The first quarter of this financial year started really well. We have a strong pipeline of projects, and we are very confident that all of our divisions will continue to grow organically. It's important to mention that our approach has always been to under-promise and over-deliver, and we are confident that we are going to achieve that again this year. And lastly, we have been growing consistently every year for the past 17 years, and we are really committed to maintaining that same mindset moving forward.
Gentlemen, thank you very much for joining us today. I hope you'll keep us posted on any progress throughout the year.
Thank you, Stephen.
Thank you, Stephen.
That's Hercules Site Services CEO Bruce Korkmaz and Chief Financial Officer Paul Wheatcroft.